Welcome to Taking Stock, Empower's first thoughts on leading financial news. I'm Vanessa Welch. Today, we're talking about the November jobs report. It shows a rebound in payrolls, stronger than expected wage growth, but also an increase in unemployment. Whether you're curious about how these numbers affect your job prospects, your investments, or the overall economy, we've got you covered. Empower's Chief Investment Strategist, Marta Norton, is here to explain what this report means for all of us. Marta, great to see you.
Good to see you.
So, Marta, we know this November jobs report shows a significant rebound from last month. Talk to us about what you think are the main drivers behind this recovery.
That's right, Vanessa. So we saw about 227,000 jobs added to payroll this month. That's above the 12-month average of 186 that we've seen over the past year. But it's really a smoothing out of the data because the prior month's numbers were really impacted heavily, as many know, by weather, by strikes. And if we're trying to get a general sense of the trend, we take the 3-month moving average, and we've seen that trend down over the course of 2024.
So we see that payroll has improved, but unemployment has also picked up, climbing from 4.1% to 4.2%. What's the story on this number?
So the unemployment rate comes from a separate survey called the Household Survey. And when the Bureau of Labor Statistics released this number, it really characterized the number as not much to see here, since there wasn't much change in the underlying data. What I would point folks to, though, is the 12-month change on a number of different fronts. So we can take a look at long-term unemployment, for example, and we see that's ticked up over the past year. Or we can take a look at those people who have part-time jobs who would prefer full-time jobs, and that number has also crept up over the past year. Looking at the employment to population ratio, that number has come down over the past year.
So how troubling are these trends, do you think?
Well, I think context is really important here. If we look at the post-pandemic period, it's been an excessively strong labor market. So it really isn't a surprise to see some reversion in these numbers. When you take a look at kind of the broader data and more labor numbers, you take into account, for example, the JOLTS number or the turnover numbers, you really have a sense for a labor market that is certainly cooling, but not collapsing.
Cooling, not collapsing. Marta, we know that the Fed looks very closely at the labor market numbers when determining whether or not to adjust these rates. So what's your expectation there, given the numbers released today?
The Fed has given an enormous amount of clarity over the past few months. That really started in the late August timeframe when the Fed had its annual Jackson Hole conference. And Powell stated that the Fed did not seek or welcome additional cooling in the labor market, kind of drawing a red line in the sand there. And then if we take a look a few weeks later, he suggested that we should expect, at least from a base case scenario, a 0.25-point reduction in both November and December. We got that in November. I think we would need a significant move in the data not to receive that in December. The question for me really pertains to 2025 and whether we will see a pause there, given how strong the economic data has been over the past several months.
And Marta, we often talk about the investment implications of this data here on Taking Stock, but I want to also talk about what these numbers mean to the real economy. Can you explain for us how the average person should interpret these numbers?
Well, listen, we're not in the great resignation anymore, where we could really characterize the labor market as one where a lot of the negotiating power lay with employees. We've seen that balance of power shift. We see it even in the announcements where companies are putting in place more stringent return to office policies, for example. But I think it would be a mistake to confuse this shift in power to be one of job insecurity. In fact, as we look at the broader numbers, as I pointed to, it's this cooling, not collapsing environment. And as we look to some of the confidence numbers from surveys, consumers have actually seen a pickup in their confidence as it pertains to the labor market, with an expectation of pretty attractive future job opportunities. So what we've characterized this environment as for the labor market and for the economy overall is a normalization. And that's a big theme in our 2025 outlook.
Yeah, your outlook entitled Return to Normal. It is extremely comprehensive. I encourage all of you who are watching to download it. Lots of great information in there. You can go to empower.com, click on the investments tab, and you'll find Marta's outlook. Marta, thank you so much for your insights today. I think it's really helpful to get a clear picture of where things stand now and where they might be headed as well. Marta's also working on a preview of what's to come on the Fed meeting, and we'll look for that in the coming weeks. Until then, we want to thank all of you for taking time to watch Taking Stock. Have a great weekend, and we'll see you soon.